So is there a best ratio trade for overnight swing traders? My name is Rosh and I'm the founder of SpyTomorrow.com as well as other overnight swing trading websites. We are overnight swing traders, which means we buy at the end of the trading day and we generally sell the next morning, and we'll trade options, stocks, and ETFs. But much of the time we like to trade options because, well, they give us the biggest opportunity to trade the overnight gap. Since we trade overnight, there's one thing that we don't have that day traders have, and that's a stop. The ability to stop out if the market goes the opposite direction of our signals. So we need a hedge to protect ourselves overnight, and that's the ratio trade when we're trading options. There are multiple approaches to ratio trades. We can consider the dollar amount. So for example, if our signal says up, we could buy a $2 call and maybe a $1 put, or a $2 call and a 50-cent put based on maybe a 2 or 3 day time to expiration. Or we could consider the number of contracts we purchase, such as 2 calls to 1 put, or 3 calls to 1 put, or 5 calls to 1 put, depending on how aggressive we want to be. We can also be a little more exact with delta. We can trade deltas, such as a 50 delta call and a minus 0.25 put. As far as which direction you go, leaning on calls or puts as your main trade, well, that depends on your signal. And there are many different signals available. We have our signals at SpyTomorrow.com, QQQtomorrow.com, but you can consider other things such as put to call ratios or possibly the MACD. There are a number of ways you can consider your up or down direction. Generally, it's a good idea to have a combination of signals, but be consistent in terms of which signals you use each trading cycle. It's important for you to consider the option ratio that best matches your risk tolerance. For me, it's the 3-to-1 options ratio. So if my indicator says up, I might buy a $3 call and a $1 put. However, I also like to work with the deltas because they're a little more exact. So I might buy a 50 call and a negative 25 put, or a negative 50 put and a 25 call, which quite often ends up being about a 3-to-1 dollar ratio, again, back in my comfort zone. I generally use these ratio trades during high volatility or when I'm just not sure which direction to go. If I have a lot of confidence, I may be more aggressive and have a 4-to-1 ratio in play. But then there are times when the market is extremely flat. And when that's the case, I do something else. During flat markets, such as say in the middle of the summer when not a lot is happening, I generally lean on small directional trades, because when you're using a ratio trade, you really do need a solid move to start making a profit. Yeah, you're protected if the market goes the other direction, but if it only moves a little bit, you're going to lose on both your call and your put. So again, during those flat times, just consider your position size, make it a small size, point one direction or the other, based on your indicator. When I first started recommending ratio trades, I often recommended and touted a 2-to-1 options ratio. But that was during a very volatile time when I started doing these overnight swing trades. But once the market started calming down, I realized that we had to have a bag of tricks. We had to understand our risk tolerance and when to use specific ratios and when not to use them. And of course, if you're unsure, don't trade at all, or you can be more conservative in your trade and just trade stock or maybe leveraged ETFs. Let me know your favorite ratio trade, and I'll see you in the next video.